Hey guys, so Cathie Wood's Ark Investment has been having a rough few months as growth stocks receded following a sharp rise in government bond yields this year. Her flagship Ark Innovation ETF is down nearly 35% from its recent high, and it begs the question, is Cathie Wood losing her special touch? And can she still deliver the kind of massive growth that put her on everyone's radar in 2020? In this video, I'll look to answer this question along with what Cathie Wood cites as the big risk that is creating a massive value trap for unsuspecting investors. So if you are invested in the Ark Investment ETFs or buy some of the stocks that her funds own, then you may want to hear this. But before we start, please consider giving this video an early like so I can keep that pesky YouTube algorithm happy, and also to help support the content I'm sharing with you today on my channel. I would really appreciate it. And if you'd like to see my #1 stock tool that helps me find undervalued stocks in the market, then feel free to check underneath this video for the link to that tool. So back to Cathie Wood, she's been receiving a lot of negative attention recently for the nosedive her portfolios have taken over the last few months. Articles such as "Is Cathie Wood's Ark Innovation Fund sinking?" and "Cathie Wood's Ark wasn't built for a flood" have instilled more fear than certainty for what's to come for Cathie Wood's prized ETF investment funds. It's not surprising to see these kinds of headlines, especially after a stellar 2020 run that the Ark ETFs experienced. 5 of her ETFs were up over 100%, with her flagship Ark Innovation Fund being up nearly 153%. Compare that to the S&P 500 total returns of 18.4% for the same year, and you can see why many investors have started to closely follow and mimic Cathie Wood's stock picks. Though on the flip side, 2021 has seen immense drops in Ark's top holdings. Some of these stocks experienced declines of up to 55%. Now, that's a steep loss, and one of the reasons why net flows in the Ark Invest portfolios have seen more outflows rather than inflows. This latest performance has gotten Ark shareholders running for the exit. So what should you do if you're an Ark investor? That's the million-dollar question, and while I can't make that decision for you, I do have compelling information that will help you make a sound decision as to what you may want to do. For example, one very important piece of the Ark investment conversation that is normally left out is that the Ark Innovation ETF has returned an astonishing 560% from inception in 2014 through the end of 2020. It's one of the most successful ETFs in the world, but short-term investors seem to always have short-term memories when it comes to this. At the first signs of a rough patch, they are headed to the door, and that's generally what gets people to lose money in the stock market. Simply being impatient. And it's also equally important to understand what it is you're investing in when it comes to an ETF. Ark investment funds follow a similar theme: disruptive innovation. These are typically unwanted stocks because, for one, they are highly speculative in nature, and two, because many of these companies are in emerging markets with no profits yet to show. Generally, they are being purchased at the beginning stages of the company's life cycle, meaning there is a longer runway to wait to see your return on investment. This environment is nothing new to Cathie Wood. She faced a lot of similar pushback in the 1980s when she became one of the first people to show interest in a little-known company called Amazon. At that time, Amazon was $5 billion in market cap. No portfolio manager wanted to recommend internet stocks because it was so brand new at the time. But Cathie, being a single mother, was purchasing on Amazon from her home and saw it as a convenient way for busy people to shop. Back then, the Amazon stock was down more than 80% from its peak, and no analyst or portfolio manager wanted to recommend it. It was a new emerging industry. Cathie Wood continued to buy, and today Amazon now has a $1.5 trillion market cap. We are seeing similar patterns today with Ark Investment's buy patterns, as she is picking up more of her high conviction stocks as they continue to fall drastically during the sell-off. Now, while Ark Investment stocks are generally seen as volatile growth stocks, Cathie Wood believes she is actually doing value investing. It's an interesting term to attach to her form of investing because it differs greatly from the value investing models we've come to know and trust from the likes of Warren Buffett and Benjamin Graham. So how is this actually value investing that Cathie Wood and the Ark funds are doing? From a recent interview, Cathie stated that she believes disruptive innovation is priced incorrectly in the public equity markets because of the short-term investment time horizon of most strategies. Most fund managers are focused on the returns in the next 18 months. Cathie is not. She says to give her 5 years. The companies she's investing in now are investing money in an aggressive manner for growth, and that's going to make the valuations of these companies look very rich. She states if you look at it in this manner, then she believes her company is actually doing value investing. She expects north of 20% compound annual returns from her portfolio over 5 years. To this extent, Cathie believes we are in a deflationary world because of all the technology that is evolving right now. This good deflation is what will drive up innovation stocks such as the ones in the Ark portfolios. Here is more of how she explained this in a recent interview. What is good deflation? Good deflation is caused by technology-enabled innovation. For example, when you see AI training costs dropping 37 to 50% per year, these are massive deflationary forces that are going to hit every part of the economy. AI is going to be everywhere. What's going to happen to the other companies? They will experience bad deflation. Bad deflation is going to hit those companies that are disrupted by all the new innovation, such as DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. These 5 platforms are all evolving right now that are all deflationary. Companies that have leveraged up to satisfy short-term oriented shareholders who say, I want my profits now, and they buy back their shares, they haven't been investing in innovation. If they are unlucky, they will lose their businesses. This is also why Cathie Wood believes investing in traditional benchmarks is a massive value trap for unsuspecting investors. Investing in innovation ETFs such as the Ark Investment ETFs is where investor money really should be in order to see higher returns in the long run. If you believe in Cathie Wood's investment strategy and can wait the stated 5 years to start seeing your return on investment, then it makes it much easier to understand why investing in an Ark ETF can be a highly fruitful investment for you. But what about those investors that piled into Ark ETFs at the height of the returns earlier this year in February? It's a hard pill to swallow to see your portfolio drop 30 to 35% since the time you invested. So should you be cutting your losses now and moving your money elsewhere? Well, it's long been known that many investors are emotional investors. When something is booming, such as the cryptocurrency markets and the Ark ETFs, people start piling in to buy at the height of the excitement, thus pushing the price of a stock, mutual fund, or ETF much higher. But there are always going to be corrections in the market, which is why finding a good buying point is always advised when buying into any investment fund. So if you do believe in Cathie Wood's investment model, then this dip we are seeing now with the current sell-off should be viewed as getting in at a discounted price from a previous high of $153. If you don't believe in her investment strategy, well, why invest in the first place? Now, there are things you can do right now if you do want to capitalize on the insights that Cathie Wood has given us and take advantage of the current sell-off in the Ark funds. One of the things that I'm currently doing is reviewing Cathie Wood's highest conviction stock picks and choosing some of these stocks that have been hit more than others and buying into each of these individual stocks. That way, I'm buying stocks that have been recommended and analyzed by Cathie and her team, but at a highly discounted price. By the way, this is not in any way, shape, or form financial advice. This is simply my research that I am sharing with you, as well as the actions I'm currently taking in my investment funds. Guys, if you've enjoyed this video, please do me a quick favor. Go ahead, hit that like button, as well as subscribe to my channel for more information just like this. I'll see you again in the next one. Take care. Bye-bye.